let's get to Brett Sifling, investment advisor representative at Gerber Kawasaki. It's great to see you, Brett. Thank you for being with us today. Wanted to get your ideas here on why you think that the economy is still strong, still resilient, and I'm sure you like the idea that some sort of deal is getting done.
Yeah, the economy still is pretty resilient. We're seeing, low unemployment, but we are starting to see some cracks, mainly between the two main economies, the large city economies like here in Los Angeles with Silicon Beach booming. But the rural economies are really starting to feel, the price of these tariffs.
Yeah, and one of the things that you noted was while we have an economy that's strong and resilient, you actually would welcome, I say this very carefully, you would welcome a recession?
Well, yeah, most of my clients are younger. They're in the accumulation stage of their lives. And so, if we did have a recession in 2020, they're in globally diversified portfolios of stocks and bonds. And so these kids are in the accumulation stages of their lives. And so we're going to continue to stick to our strategies, continue to watch this play out and welcome the volatility.
I know you wouldn't want a 50% pullback. I mean, that would be, the Great Recession, it was huge. You know what I mean? You saw the Dow at 6,500. People were losing their shirts. They were so worried. And it took some time to make our way out of that slump.
Yeah, well, I don't think that if we did have a recession that it would be too comparable to the 2008. While we're in one of the longest expansions in U.S. history, it's been very shallow and the growth has been pretty slow. And I'm not really seeing excessive, speculation or excessive debt. We've seen a lot of these IPOs really come back to earth. So, I just don't think that it's really comparable to 2008.
I know that you have some picks as well, such as NextEra Energy, NEE. We talk about wind and solar, and I know, climate change is something front and center. Why do you like this one?
Yeah, well, NextEra Energy is really at the forefront of wind and solar. Wind and solar in general has become the cheapest options for 2/3 of the global economy. This one is a bit expensive right now, but I think that they've truly earned this premium by bringing real profitability to the space. They're growing year over year, and it's been a great stock to be in.
I also was watching the other name that you mentioned, Crown Castle, CCI. What a night! It had a high in September. Then there was some bearish signs according to some of the analysts. They're out there leasing towers. This is the wave of the future.
Well, one of our main investment themes is this 5G revolution that we're about to go through. China's already been going through it, and CCI really owns the towers and leases them out to the major cell phone carriers. They've got over 40,000 towers and have about 75,000 miles of lines, catching the eye of some big name investors like Bill Gates, and really they're perfectly positioned as not only just a dividend company with over 3%, but also that growth potential as well.
So you said you have a lot of millennial clients. Are more than 50% of your clients millennials?
Oh yes, by far.
Oh, by far. What are some of the things that they're looking for? What kind of questions are they asking for? What are some of the goals? What do you have to field on the telephone when you're answering it?
Well, a lot of people's main goals being here in LA with real estate prices so high is getting that home down payment saved up for, as well as making sure that they're, taking full advantage of their company stock plans, whether that's their ISOs or RSUs. And also planning for retirement. These are smart kids, and they're really looking to plan for their future.
I know you have one more pick, and that's the Vegas trade, right? We always like the Vegas trade, but I liked what you said here. The house always wins, so why not own the house? Tell us about your Vegas trade.
Absolutely. I'm actually going to head there next weekend to do some boots on the ground research at MGM Grand. But this is actually MGP, the growth-oriented REIT that was spun off of MGM. And really, they just collect the rent off of the casino properties. And Vegas has been hot. Real estate prices continue to increase there. And so I think that this is a little safer way to play. And why I keep bringing up these dividend stocks is I continue to think we'll have more volatility throughout the rest of the year and into 2020.
What's the asset allocation for these young folks? You just put them all right into U.S. equities, or how do you break it down?
Yeah, no, we're looking at, more of like a 60% stock, 40% bond portfolio. The bonds have done incredibly well this year, while, equities really haven't gone anywhere in a year and a half, 2 years. So, we're keeping our foreign allocation, to a minimum. We're underweight it compared to most other firms, but, we still like the US and still think that is growth here.
Great to see you. Brett, thank you so much. Brett Sifling, investment advisor representative at Gerber Kawasaki. Thanks for joining us on the show. Great to see you.